Hi, I'm Peter Nichols from StoneX and work in capital market sales.
Hi, I'm Dmitry Netis, and I work on the M&A advisory team. We're both part of StoneX burgeoning investment banking operation, and we were acquired as part of Benchmark team last August.
And today we're here to talk about the subject of quantum computing. And I'm going to put a few questions to our in-house expert, Dmitry, and talk about his team's recently published white paper. Questions for you, Dmitry. Quantum computing is a big topic in growth equity today. In only January of last year, NVIDIA's CEO Jensen Huang said we're at least 15 years away from quantum advantage. And then he stood down from that comment just 6 months later. What is quantum advantage, and why does the investment community need to pay attention today?
Good question. So in layman's terms, quantum advantage is a point in time when quantum computer begins to overtake a classical computer from a cost, performance benefit standpoint, and the certain workloads that apply to that cost-benefit analysis. So for example, you might have a pickup truck and a roadster in your garage. They're both good at what they do, but one is not lowering the cost of the other. If you take AI training and inference, which runs on classical hardware today, GPUs are churning through a matrix of math problems with enormous data sets, and quantum computers are simply bad at that kind of workload. They can absorb AI's compute, they can run it more efficiently, and they can really substitute for it. However, there are valuable sets of problems that classical machines struggle with or can't solve at all, such as drug discovery, molecular modeling, designing new batteries or photovoltaics that convert light into electricity, or even financial modeling that optimizes portfolios, price options, and derivatives. There, even today, quantum has an edge versus classical compute.
And can you talk us briefly through the different modalities of quantum computing and how we should think about the interplay between quantum computing, AI, and classical computing?
Yes, so this is a two-part question. So touching on modalities, which is essentially types of quantum computing. We described that in our white paper. And there are several. There's superconducting quantum, there's neutral ion, silicon spin, photonic, and trapped ion. So we're witnessing a lot of companies now, privates and publics, actually making bets across this entire quantum ecosystem, onboarding multiple modalities or types of quantum, and even going for vertical integration. And a lot of it had to do with hedging their bets. So Google, for example, acquired Atlantic Quantum to double down on superconducting on top of their photonic and neutral atom work. IBM is working in the superconducting arena while also dipping its toes in photonic computing. And D-Wave, just as another example, is doing annealing, but also superconducting quantum now with this acquisition of QCI just earlier this year. IonQ, which is a leading trapped ion compute company, acquired across the entire spectrum, from quantum sensing to quantum networking interconnect to AI-based algorithms and software to fabs and supply chain, especially with this last acquisition of Skywater, which is the $1.8 billion acquisition. So this was a vertical integration play, and they're doing a fantastic job there. On the second part of your question, the interplay between AI and quantum, very interesting, most certainly. We may already be running out of compute power in AI data centers, and the energy is quite scarce to keep them running at all times. So a hyperscale AI campus, for example, runs thousands of racks and thousands of servers that can consume up to a gigawatt of power. Quantum, if it can even replace some of those workloads, can scale down that power consumption by an order of magnitude. So the data center now is actively looking at co-locating CPUs and GPUs with the quantum processors or QPUs. So there's this whole slew of convergence between all these different computing technologies.
So when you think about the capital cycle and needs of companies in the space, where are we? And within that framework, how should we be thinking about consolidation?
So as far as the vendor consolidation with meaningful revenues, we're decades away. And there will be winners there and losers, because we're very much in the early cycle of that, and there's a slew of companies that have no revenues at the moment. However, the vertical integration, or sorry, consolidation within the quantum ecosystem, from quantum chips to sensing circuits to networking to cryogenics and cabling to even manufacturing fabs, has already begun in a major way. IonQ is leading the way with 10 acquisitions in just last 2 years. The costs required to develop a quantum system are no different than what we're seeing in the AI frontier LLM economy, or even going back to the early semiconductor chips development days. Companies like today, Microsoft, Google, Rigetti, and IonQ have already spent upwards of $1 billion in capital expenditures to productize a quantum computer. A rough price of a quantum computer today is $1 million, but this may vary quite a bit and be even higher than that amount, depending on the modality, the number of qubits in the system, error correction techniques or requirements to achieve the high fidelity and fault tolerance we're all looking for. The rule of thumb is $1 billion in development costs for a 100 qubit system that has a sticker price of about $1 million. So as a result, we're witnessing several companies tap into the public markets via blank check companies today: Xanadu, Pascal, Horizon, IQM, CQC, Inflection, where they can use their stock currency for acquisitions and product development. All of these SPACs have priced at over $1 billion valuation, oftentimes much higher than that $1 billion target. One large IPO on docket this year is Quantinuum, which is a spinoff of Honeywell. That valuation could exceed $20 billion, is what we hear. Another private company, Sandbox, spinoff of Google, their valuation eclipsed $6 billion, and they've raised nearly $1 billion of equity to date.
Coming over to your excellent white paper, Dmitry, which has received plaudits, and especially within the private company and VC community, can you bring out a few of the key points, please?
Sure. So what we saw that made us jump into the quantum pool with our arms and feet is the following. Number one, in the past 5 years, the sector has demonstrated steady progress, reaching an inflection point in 2025. Valuations have skyrocketed from public companies, but even more so from privates. IQM's $1.8 billion valuation is more than 3x than that of August of last year. Number two, estimated revenue from quantum vendors on a combined basis has already eclipsed $1 billion in 2025. So this sector is certainly the one to watch and is already generating revenue. And number three, market opportunity over the next 10 years for vendors alone could be north of 150 billion, while in terms of economic value being created by those vendors and industries that they're in, could be north of $1 trillion over the next 20 years. So there's a lot of interesting sort of potential here from quantum compute.
Well, thank you very much, Dmitry. Great to be with you here today.
Great talking to you, Peter. Thank you. Cheers.